Central bankers take centre stage at the Jackson Hole Economic Symposium. Welcome to Market Insight, I'm Ramzan Karimali. So overnight we had comments from the ECB's Martin Kazaks on the sidelines in Jackson Hole, suggesting the central bank would be cutting rates next month. In Japan, Governor Katsuo Ueda gave testimony to Parliament, where he indicated the BOJ was ready to hike rates again. And later we hear from both Fed Chair Jerome Powell and Bank of England Governor Andrew Bailey. So what should we expect? Well, to help answer that and more, I'm joined by Jeremy Stretch, Head of FX Strategy at CIBC. Jeremy, thanks so much for joining us. So what would you like to hear from Jerome Powell later on today?
Well, I think what we're really looking for from a market perspective is a recognition that the job of the Federal Reserve in terms of restrictive policy has now run its course. And ultimately, the Fed is now preparing the ground in order to gradually but progressively ease monetary policy, so ease monetary policy restriction to make sure that that hard landing scenario that was, of course, amplified and feared at the beginning of this month, and we had that bout of market uncertainty, isn't amplified. So I think we want to see Fed Chair Powell laying out that the data will dictate the path, but the path is very much geared towards a graduated and progressive policy easing.
And what about Andrew Bailey? The Bank of England don't look likely to cut rates next month, but more easing ahead?
Yes, I think that's true. I think we are going to see further easing ahead. I think it's right and appropriate for the Bank of England, I think, to be a little bit more patient in the context of the monetary policy narrative. They've already started their own journey in terms of policy easing. They don't need to follow that up with consecutive monthly or meeting moves. I think they can wait until November. They will then get updated forecasts. And of course, if we look at that Q2 GDP print, that was above expectations, or at least above the trend rate. And so I think there's an opportunity for the bank to be a little more patient and allow the data to move a little more in their favor. And also get the fiscal adjustment out of the way after the budget before the bank feels it will be appropriate for the bank to consider necessary further easing.
Well, one central bank that does look like they'll cut rates next month is the ECB, especially after those comments by Martin Kazaks. But again, do you think there'll be more easing to come there too?
Yes, I think the ECB is in probably a similar stance to the Bank of England in so much as, yes, they are in an easing bias, but I think they can and will choose to be relatively cautious and prudent in terms of that policy profile. So I think it probably means, unlike the Fed, who are probably going to be cutting at every meeting through the rest of this year, that the Bank of England and the ECB will prove to adjust policy only in the meetings which coincide with updated forecasts. So I think that favours that gradualist approach. So the ECB coming back after the summer recess and cutting rates again in September. But I think then they will hold off until the December meeting. And so I think Kazaks, who of course is very much of the hawkish bias, I think favours this gradualist approach. And I think that's probably appropriate for the ECB.
And what did you make of the Bank of Japan's governor's testimony to Parliament and the impact it had on the yen in particular?
Well, clearly, the Bank of Japan governor was defending his policy stance. Now, of course, if we go back to that market volatility that we had at the end of last month and the beginning of this, that was partly a function of that BOJ move that prompted an unwind in carry trades and created inter-month volatility. So Ueda had to defend that policy. Yes, he would like to see further policy tightening, but I think he will not necessarily get the data that will warrant that policy move anytime soon. So yes, the BOJ in terms of its next move will probably be a hike, but I think the data will probably preclude that, because if you looked at the core CPI print overnight, that dropped down back below 2%. So I think the BOJ, yes, will retain a hawkish bias. That was very much the Ueda narrative. But I think the pullback in terms of those yen gains underlines the fact that I think the market is cautious in terms of how quickly that next move will come from the BOJ.
And talking of currencies, what have you made of the recent dollar weakness?
Well, it's been very much the case that if you look at the US dollar, particularly over the course of the last month, for example, it has fallen against every one of the major currencies bar the Mexican peso over that period. So it is very much the case that investors are moving away from dollars. It is that presumption that the landing will be somewhat harder, although I think that's probably a little bit overblown. I think it is the case that markets have obviously been amplifying Fed rate cut expectations. Again, I think we've probably moved a little bit too far in terms of that policy pendulum. So pricing in near 100 basis points of easing this year, I think, is too much. 75 at most, I think, is appropriate. But it is very much the case that this sort of negative macro backdrop and or presumption of a very aggressive Fed easing cycle has really compromised the dollar. And I think we've become a little bit oversold at this particular juncture. So I think it's probably appropriate to start to consider a little bit of a pullback, particularly when you look at the month of September, which is obviously often one which is relatively tough for risk. And if risk is again destabilized in the month ahead, then that will probably limit the dollar downside at least into the end of the quarter.
And that's Market Insight. Don't forget you can watch more videos on Reuters.com.